Welcome everybody to the Chinchilla Pickin' Podcast. It is June the 29th, 2025 at 4:07 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only, the Baron of Bonds himself, Brandon Beaver.
What a weird week, man. Like it just so much happened that by the time Monday came around, everything that we said was out of date already last week.
Yeah, a lot of it, yes, but some of it, no. We were actually right on a lot of it.
Yeah.
But yes,
Yeah.
out of date. The news moves quick. It moves quick,
E-
but
Especially with a president that moves very quick.
yes,
Everything.
yes, 100%, yes, yeah. Everything is. The news comes out, it gets going, it gets out there, moves. Stocks are moving, prices are moving, everything's just flowing at a extremely fast rate nowadays with social media and the ability to get things out there with a stream of social networking sites like X and so on and so forth that just news clips, even if they're wrong, they have to get them out there immediately, and I hate that. But it is
Yeah,
what
I
it
agree.
is.
I agree.
Anywho, but there's something more important, Brandon. I want to talk about, and it's coming up this week. It's America's Day, America. It's July 4th, man. It's coming
Yeah.
up Friday. In between podcasts, we got to say something about Independence Day, right?
Sure.
Right? I mean, happy Independence Day, America. Run out your Gadsden flags. Let's have a good time. Let's blow up some fireworks and grill some hot dogs, hamburgers, or what. I mean, most everybody goes to festivals nowadays, right?
Well, I mean, we used to set off fireworks ourselves back in the day, and I'm just lucky I have all 10 of my digits left.
I mean, I used to set off fireworks too, and that's what I grew up doing. And I as an adult, I did it a few years. I find myself now as older, I'm like, I don't have any grandkids yet. And so let me go sit somewhere and let somebody else do all the work. And I'll
Right.
just go
Right.
buy a hot dog or hamburger and watch some fireworks and go
Yeah,
home.
that gets expensive. It gets expensive. No, no, not what you're doing, but the actual setting off the fireworks yourself.
Yeah.
Oh man, that was a big yearly expense for a while.
It was fun. Don't get me
Yeah,
wrong. I had a
fun.
blast. Yeah. Yeah,
But
and
yeah,
we grill
I'm,
out at home anyways. You just could grill out and have a good time, and that was. I don't know. I mean, if you're listening right now, or you're watching this now on YouTube. I got to get used to this being on YouTube. Watch my mannerisms when you talk. But if you're watching this on YouTube or listen, I mean, let us know. DM us. Let us know what you do for July 4th. What's your traditions, if you will?
don't tell
What's
me I
something
don't
to
care.
do? Your family's from the South, though.
Damn
I
you.
mean, like you guys got to be like deep in the fireworks and grilling out,
Oh
right?
yeah, it was a big deal for a long time. But then my mom put the kibosh on it, I think. I think she's the one that put the end to that because it was it was a lot of money for my parents every week.
Gotcha.
Every year.
Gotcha.
Yeah.
See, it was most of my family on my dad's side native, still live near the reservation. I mean, it just kind of like you get more not country as in like West Virginia, Kentucky country. Talking country as like we just live out peacefully by ourselves type country people. I
Yeah.
don't know.
Good time.
Maybe that is that. Maybe I'm wrong. Maybe that is that, and
I don't know.
I have it wrong in my head. The stereotypes. Who knows?
Who knows?
Anyways, America, run out
America.
your Gadsden flags. Let's have some fun.
America.
Yes, there's the Fed news that was all over. I couldn't turn on Bloomberg, Cheddar, CNBC, Fox Business, any business stock news channel, and not hear someone within 5 minutes, Brandon, mention the Fed and rate cuts and the Fed chairman and Jerome Powell and Trump, and I was just getting sick of it. I'm like, guys, there's more to the market right now than this.
Yeah. So the only reason why I'm even paying a little bit of attention to that is because I own Newmont Corporation, and I think interest rates can't go higher. Maybe on short-term interest rates or on bonds and stuff like that, they might jump on fears when something happens. But the Federal Reserve's not going to raise interest rates. They can only go down from here. The
Yeah,
question
but
is,
when? And that's the question, when, right?
it's when and how long fast they're going to do it and how much they're going to do it this year. But it's still a good setup for Newmont Corporation and gold miners and gold itself, I think. Um, Government spending is not slowing down. It's not. I mean, we
No.
the big beautiful bill that's gonna pass. So you
They
got
changed
government
it a lot. The
spending.
Senate has changed that bill. I knew most of what was in it when it first got to the House. Now it's been changed so much, Brandon. I don't know really what's in it anymore.
Just know it's a lot. So there's a lot of money going to be added. There's still going to be a devaluation of the dollar. There's good pressures on inflation, which is awesome. But I think that the gold setup is good. I think the Newmont Corporation. I read that they're poised for growth as long as gold remains above 2,000 an ounce, and we're like above 3,000 an ounce right now. So they're in a good setup. So
You're happy.
yeah, I'm happy with that. And
You're happy with your investments
yeah,
because of it. I get it.
right.
I get it. All right. Well, how about we move into the show? I
Well,
know you
let
have
me
a.
ask you this question, Dave. Are
Go
you going
ahead.
to sell Microsoft Corporation if the Federal Reserve doesn't lower interest rates?
No,
No, me either. So this is just all overplayed. It's all overplayed. They're trying to find drama and a slow news cycle.
I would probably if the GDP turns negative and consumer income, like average income, goes down,
Right.
and the Federal Reserve doesn't lower rates, you could probably sell some home builders.
Yeah.
You can
I,
make a case for that. A case for it. How about that?
right. Right. I agree on that.
There you go. But there's a lot of ifs in that statement, so it's like I'm not going to consider worry about that.
Right.
All right, here we go. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the lie back and forth, the bicker and the banter right here on the show for you. Brandon, back to the usual format. Take us away.
Okay. All right. I didn't know I was going to go first, but it's cool. I'll do it. It's probably a better idea. I tend to talk long anyway. So
You have better information, is what it is, and you are more detailed.
yeah. Yeah. I'm very detailed. Um, Nike reported earnings. So, I mean, who would have guessed? Who would have had it on their bingo card that Nike was going to be the best performing Dow stock and S&P 500 stock of the last 7 days? Not me.
Not me.
Not me.
You sure the best S&P? I bet you I could find one better.
Yeah, I think it was the best S&P 500 stock. It was up at 18% over the course of 2 days.
I'm gonna check that number right now. But go ahead,
Yeah.
continue.
So you may wonder why the stock erupted the way that it did. I'm going to go into the earnings here. The earnings were mixed. They beat expectations, but they weren't great. But there's a few reasons as to why the stock took off, and I want to tell you what my conclusion in on this is at the end of this, and if I would buy it. I already own it, but if I would buy it now at this point. And I want to go into what I look at as far as turnaround plays go. Because I've had some rather successful ones. I had a failure in Boeing that didn't last very long in my portfolio, and I made like $1 out of it. But, I would count Meta was a turnaround play because I bought it when nobody liked it. And then they had to have that rather successful year of efficiency to get back on track. GE Vernova, GE Aerospace, all the GE companies, those were turnaround plays. I'm looking at Disney right now, still hold Disney. That's still a story in play. So, what do I look for when it comes to these turnarounds? And I'll get into that here too. But first, let's talk about why Nike is in the position that it's in and what led us to this point. So, for years, Nike has experienced declining revenues and a notable erosion of its profit margins, culminating in its shares trading at a 10-year low just a couple of weeks ago. It's been a very, very hard downturn on all fronts. Several key factors show this. Sales in Greater China, historically a vital market for Nike, plummeted 21% last quarter, actually, in 2025. That's a region that accounts for 20% of the company's total revenue. Nike reported an earnings per share of 14 cents on revenue of $11.1 billion dollars. That exceeded consensus estimates of 12 cents a share and 10.7 billion on the top line, respectively. But quarterly revenues have decreased 12% year over year. EPS plummeted by 86% year over year. So go ahead, Dave.
Is this all due to the running mainly, the running aspect of Nike's business, or like it's
No,
because I know the sneakerheads loved Nike. So you're
right.
talking about actual athletic shoes, correct?
Yeah, so they had a lot of self-inflicted wounds where they stopped focusing on the running category. I'll give you one major issue that they had, for example, going into 2020, when the COVID decline set in and we started locking down everything, Nike ceased ordering stuff. They just stopped ordering things. And so what happened, right? Everybody had to stay home and they were getting these COVID paychecks and they were going out and saying, well, the only thing I could do is go outside and do activities like run or play basketball. So a lot of people started buying shoes and Nike was not prepared for that because they stopped ordering stuff. And that's just one thing that they did. They stopped paying attention to the runners. They stopped showing up the running conventions. For example, we talked about Branson, Missouri's running conventions in the past where there were just no shows. Um, and they just stopped focusing on those things. And they also tried to do a bigger focus on digital sales and going direct instead of going wholesale, which was their entire business model in the past. They tried to shift that away. And what happened when we all stopped locking down and returned to COVID? We all wanted to go out and buy stuff. Nike wasn't there. So
Yeah,
a lot of
they were not
self-inflicted,
there.
yeah, a lot of self-inflicted wounds as far as Nike goes. A lot of these the decline in earnings per share can be attributed to one-time issues, restructuring charges. For example, our drag on earnings per share right now, although the CEO said that like we've seen the worst of that, those headwinds are going to moderate in the future. And they have done some significant restructuring. One thing, though, in this return to in-store sales that I am concerned with is that this report shows a 26% decrease in digital sales.
Okay.
But they have not made up for that altogether in in-store sales. Wholesale sales were actually the one positive though. I will say that they were up 9%, but not enough to make up for that 26% decline in digital. And I want anybody that's listening to this to go to Nike.com and shop for adult male shoes because almost every one of them are out of stock. You can hardly find any adult male shoes. You're looking at like the Jordans and stuff, it's almost babies and women's
Is
completely.
it so? I got a couple questions here. I know you did your research. I know you probably have answers to this.
Yes.
Is it more because of Nike has lower inventories that they ordered, or is it because of the whole resale business? People, sneakerheads coming in, buying it up, hoping to make a quick buck on reselling it on the market. And like Nike's making limited versions of everything, and that's how a lot of these people are making money, or is it truly like Nike's sales are just through the roof?
So, no, it's not Nike sales being through the roof. Otherwise, this quarterly report wouldn't have shown such a decline in revenue year over year. It is partly what you just said, but it's also a return to their wholesale business model where they're trying to sell in stores and trying to revitalize and reconnect with those old business partners that they'd lost touch with, quite frankly. So it's part of that too. There's also been a significant driver of trying to even out their inventory because after they didn't order anything for the pandemic, they ordered too much right after. They increased their orders, and then all of a sudden they had an inventory glut. So that's another thing I was watching for on this earnings report. How well are they managing that inventory? And they've used actually a lot of Nike pop-up stores and utilized their self-named stores, their own stores, Nike store, for example, for pretty successful price markdowns, which unfortunately dropped the profit margin. The gross profit margin was down about 444 basis points, down to 40%. But I honestly think that that was actually good news for the stock, the gross margin, because I think a lot of people were expecting the tariffs to hit a lot harder than they did. 16% of Nike imports into the United States come from China. So I think that they were expect, and then there's a large portion from Vietnam too. So I think that they were expecting a bigger hit on gross margin because of that, and because of the markdowns. The fact that Nike was still able to land just above 40%, I think was actually a good surprise.
Now,
I I was fine with that.
yeah. Question in regards to the tariffs. You mentioned they get, you said what, 16% of their volume from China?
16% is going to be $1 billion in extra costs.
How much of that's getting passed on to the consumer?
They are going to nothing right now, but they said that look for in the fall they're going to have surgical price increases. It's also notable to say this that this earnings report came out on Thursday, and then you know the stock rose about 10% in the after hours, which was awesome. Loved that. But then it was another 6% the day after, 6 to 8%. So it's close to about 18% gain in 2 days. Part of the reason why it continued the momentum that second day is because Trump and China announced a framework for a trade deal, including those, what we were talking about prior to the show with the rare earth metals and such. So that $1 billion that they're talking about as far as tariff charges go, probably not going to be $1 billion. It'll probably be less than that. So,
So actually not as bad for Nike. So
yeah.
a tailwind compared to what we thought it was going to be.
Right. So this is another one of those stories that wasn't as bad as I thought it was going to be, and some people thought it was going to be, including tariffs.
I
So
still, I still, I'm sorry. I hate to cut you off here and interrupt you. I apologize for that. I still go back to when I was asking about new footwear, right, to work out in,
yeah,
and not one of the shoes was Nike. And I go to gym 5 days a week, and I'm out at different fitness events throughout town right now, and I see a lot more people wearing a lot of other different brands than what it used to be. You see the On Clouds, the Hokas, all these new and upcoming brands. Everybody's got to have a brand that fits their particular belief even nowadays. You know,
yeah,
I'll see a lot of Pride shoes, and I'll see a number of Christian related brands, and then I'll see a number of this type of military related brands. And every brand, there's now a brand out there for everybody that's backed by a
yeah.
certain organization.
That's true, but there's been a lot of successful product launches just over the past 6 months that have kind of piqued my interest. I'll get into those here in just a minute too, but
Good. I'm glad you are, because I have questions about that.
and
How are they going
also
to compete now that the market's saturated of all these other
right.
good brands that people are loyal to?
One of the other things that I want people to look at when they go to Nike.com, other than the stock and inventory levels, and maybe even you go to footlocker.com to look at these things, because they have actually a larger selection than Nike.com does. Look at the uniqueness of the shoes now, because they are very unique, the new shoes that are being offered. But I'll get into the strategies here in just a second too. Uh,
See, I don't buy my everyday shoes, sneakers, anymore. I have workout shoes, running shoes, walking shoes. I got my
this you're
cross training shoes,
you're playing into their strategy. I'm
but
gonna
none
get
of them are Nike,
ahead
and
of
I
me
don't
here.
have any. I'm like, I don't see a reason to buy Nike.
So let me okay, so you might in the future. Let's see if they can
All
do
right.
successful marketing and ad campaigns, and let's see what your opinion is after my little presentation here.
Go ahead. Sorry, I keep interrupting you. I apologize.
So no, you're fine. They did say that the fourth quarter represented the largest financial impact from their win now actions, which is their restructuring. They said that these results are in line with what they were expecting, but they're nowhere near where they want to be. And keep in mind, this is a fairly new CEO. I believe he took over in October last year, and it was somebody who I thought that I could trust. And so far, I think it's going in the right direction. Slowly, but that's to be anticipated with these situations. They have two different initiatives that they talked about on this earnings call and that they announced just a few months ago. First is Win Now, and second is Sport Offense. Win Now is sort of how they're going to save their bottom line and their profit margins and all of that stuff. Sport Offense is going to mostly focus on the top line, and that's going to be your revenue growth drivers. So when now, this actually was implemented in December. That's their immediate operational response to their market challenges that they have, focusing on five key areas: culture, product, marketing, marketplace, and what they call their ground game. Their biggest shift here is trying to strengthen and straighten back out their wholesale partnerships that were lost prior when they started going more digital and pulling away from brick and mortar. That's number one. And this is a significant reversal after years of prioritizing direct consumer. And this has actually showed some early signs of promising growth. It was literally the one thing that I think people looked at and said, this, we could be seeing a bottom as far as revenue declines go. Wholesale revenue did rebound by 9% in the quarter. So that's good. Another critical component of this win now strategy is cost discipline. So Nike has implemented substantial cost reduction plans. They achieved $3.2 billion in operating overhead cuts in the past year. That resulted in a 7% decrease in operating overhead for the full fiscal year. So that was another positive step in the right direction. They have had leadership restructuring. 11 of the direct reports under the CEO have been replaced. There's 15 of them, so there's only four of the originals left there. Another thing that they're trying to do is address the inventory glut. By the end of 2025, inventory stabilized at $7.5 billion. It's now flat year over year. That's good because it was increasing and going in the wrong direction. They're reducing their manufacturing share in China from 16% where it is right now, and they want to get that down to the end of fiscal year 2026. They're saying it's going to be the high single digits. So it's going to be almost a 10% decline.
Where's that going? Is that going to India, Vietnam, or
Vietnam.
Vietnam? Okay.
Yeah, which is another kind of issue for
I think
Nike
the
to bounce
Vietnam
back.
issue is going to be sorted out quickly.
Yeah, I think that's going to be a little bit better. So what you're looking at with the win now, that's addressing cost issues, cost pressures, margin, trying to keep that intact and buy them more time to get their revenue growth back on track. It's been 2 years of declining revenue, 2 straight years. So it's going to take some time. Well, you were talking about those, differing categories of shoes. That's what I'm about to get into right now. There's sport offense. That's concentrating on several key pillars. They want to make distinction within core sports categories. So when you go to their website right now, instead of the traditional men's, women's, toddlers, boys, you see running, basketball, training, custom shoes, and so on. Right. So they're now organizing their product categories by sport.
I like custom shoes. Did I hear you say that?
Yeah, I don't even know what that is. I was looking at the category on Nike.com earlier today and I couldn't figure out why it's called custom. You might be able to customize them. I don't know. But what that allows them to do is it allows them to focus on specific athletes, right? Like Luka Doncic or that runner from the Olympics. I think she's in the one that's trying to beat the 4 minute mile right now. Do you know what I'm talking about?
I do.
There's going to be a marketing thing on her from Nike telling
It
her
was
story.
all over social media recently.
Yeah. Yeah. So it's going to be telling specific product and athlete stories, which is what they used to do, by the way. They're going to go back to it, which is a good thing, I think. The sport offense, concentrating on several key pillars, distinction within sports categories, building a comprehensive product portfolio, crafting compelling stories, and marketing in an attempt to more connect again with consumers. That's showing promise. So, running sales, for instance, grew by 16%. They also have had a decent amount of successful product launches. For example, Aja Wilson, her WNBA collection sold out in 3 minutes.
Okay.
Yeah. So that, I mean, that was a good one. Now, Dave, for our listeners or viewers here on YouTube, I want to show you this one. I got to pull it back up because apparently I lost it here. But Nike Air Max Snowfers.
Snowfer?
Yeah.
Is that like a loafer sneaker?
It is
Sneaker
a
loafer?
loafer sneaker. It is honestly, I am old. I must be old because this thing is already off the charts popular to the point where people are already setting their resale prices at $500. The This is so terrible to me. I don't understand it. I got to find it though here. The retail price on this is going to be $155. Let me share my screen here if this will let me do it. Is there a share thing here, Dave? I'm losing my mind. Maybe I should have figured this out before we started the podcast, huh?
Right. That would have been good.
Here we are. I got it. Look at these things. Can you see? Are you seeing what I'm looking at?
Popping up. Yeah, that's no, that's ugly.
I know. Does that scream $500 to you?
No.
Apparently, they're super popular right
That
now
that screams
already.
$16 at Payless.
I know. Hasn't even been released yet, though. And they're already popping $500 on the resale value on them. I don't
Waste of
understand.
money. If nobody buys the resale, the people who buy this would have just lost out and they have to wear those shoes. Nobody buy the resale and just make everybody just suffer.
No, shut up, Dave. I own the stock. Everybody.
No, sorry.
Everybody is
Nike
terrible,
needs
but
to
go
be
spend your
punished for
money.
making something so ugly. That's just ugly. Maybe I'm just old and out of touch with style. That's fine. I'd rather be out of touch with
That's
style
it.
than wear that.
That's it. These are super awesome, and me and Dave are old and out of touch
Dave and I.
with the terrible product launch that is going to be these snowfers. That is actually really awesome. Go buy them.
No, they're not. Don't.
So
Disgusting.
yeah, I agree, but you look, they're popular. So I mean, it's one of those things I'm looking at, and I'm like, dude, if it makes money, I, I'll be
No.
fine.
There's lots of other shoe brands that are better.
But when you go to Nike.com, there's a lot of other better things on there than
I'll
that. But
check
I'm
out
just saying, it was
Nike.com just because you're recommending me
yes,
to,
do it.
but
It will
I
put
can't see myself buying anything. There's too many other brands of shoes that I would prefer to buy.
I think that with this right now, I would love to buy it again if it goes back down into the 50s. It's $72 a share, so I don't think it's gonna. I think we saw a bottom. In the 60s, I think you buy it for sure. In the 70s, you adopt a wait and see approach, which is what I'm doing. I'm not selling it. I will say this, I did sell a few shares, but that was because the 18% increase gave it a market value in my portfolio higher than Google and GE. And I thought to myself, Nike doesn't belong there. So
No.
I sold a couple of shares to get rid of it. But you know,
Did
I
you buy Met Sarah with that money?
no.
That pharmaceutical company I told you about? No, of
Yeah,
course not. Why would
absolutely.
you?
Because it's pharma. I can't. It's not in my brain
Met Sarah's gonna
power.
make lots of money, okay?
Okay.
What about that penny stock I recommended in our group chat?
I
Yeah,
don't.
if you're listening right now, I recommended a penny stock for the first time in years in our group chat, and nobody wanted to buy it.
I don't buy
Everybody
penny
was
stocks.
everybody's like, no, I don't do penny stocks. I don't do penny stocks. I'm like, guys, I'm just throwing a little bit of money in this. It's gonna be fun.
I,
No, no, don't want to do it. And I said JP Morgan just backed this company financially and didn't take a dime and took just stock shares as payment. And they can't sell for at least a year. I mean, come on. This stock
but
is going up.
that who knows why they did that? There's probably some other contracts in there that's made JP Morgan a better deal on it. Who knows? I don't know. I don't know what their reason it is.
To
I'm
me,
not
it
the
was a
person I
buy, and
buy.
it's gone up. It's gone up, man.
I,
I've made 50% return on my money.
did you sell? Are you
No,
still holding it? Okay.
I'm holding.
Okay. So what am I looking for when it comes to Nike? This is what I dive into, what I'm seeing from my perspective when it comes to turnaround plays, right?
Okay.
Anytime you do a turnaround play, it can be a pain in the butt because these stocks have got to be monitored a lot more than the other stocks in your portfolio to make sure that these things are still on track because the uncertainty is higher. So what I want to see in quarter one of by quarter one of fiscal year 2026, I want to see a recovery of gross margins back up to 45%. That's what I'd like to see there. I want to see a China sales rebound because that's 20% of the business. By quarter one, fiscal year 2026, I'm saying this 10% sales rebound of revenue in China. I'd like to see it. Um, for holiday sales, 2026, strong performance of new premium products. I'm looking at the Vomero 18 and the Nike Skims line specifically because they're putting a lot of money into those. I want to see those pay off. I want to see inventory reduction, continue progress in that. I would prefer to see a reduction below $7 billion by mid 2026, but I'm not really holding to that 100%. Narrowing revenue declines, I'd like to see low single digits, really, hopefully by the end of this year, as far as revenue declines go. I also saw an interview on your favorite television show, Dave, CNBC,
That's a channel, not a show.
whatever. I was watching this and it was reported by an Evercore ISI analyst that their future order book at Nike has went positive for the first time in 2 years. So the future order book, that's a metric that's traditionally used by apparel and footwear companies. It represents the value of products that retailers have committed to buy for about the next 6 months. And what Evercore ISI was saying, and I couldn't find anything about this myself in their earnings report, but a lot of these analysts have calls with Nike executives and even have like special access to their books and stuff like that. So take it for what you want. But Evercore ISI says the order book right now, for the first time in 2 years, is showing revenue growth. And what that could mean is that the next 2 quarters, by the end of this year, if that's true, Nike could already be in the revenue growth year over year category, meaning they're going to beat their own goals. So,
Nice. So good
yeah,
time to buy.
right. Their price target, their 12-month price target on this is $90. I think it's trading at 72 right now.
Not
So,
a bad return.
right. So that's my checklist. That's what I want to look at as far as Nike goes in the future. That's what I'm seeing right now as far as the progress goes. My concerns primarily lie in that 26% revenue decline for digital sales. I don't know about you, Dave, but after the pandemic, I was like, I want to go out. I want to go out and buy stuff. If I'm going to buy stuff, if it's going to be brick and mortar. And now I'm kind of back to Amazon.
uh yeah, I
Go
was
out and
like
do
that
that.
at first, just like you. And I initially had lost some weight right away. Like, let's get in shape. Let's go do this. And then, I got lazy again, had my surgery, and I was out bed rest for a while. But now I'm back. I'm back to, I want to be outside. I want to be brick and
Sure.
mortar.
Sure. And
I
real
still
quick,
buy stuff on Amazon, don't get me wrong. And I still buy stuff online, have it shipped here. But if I can, I'll do brick and mortar. Just, I don't have my daughter at home anymore. I'm
right.
an empty nester, so I like getting out of the house.
Yeah, you might be one of those. I don't know. Where do mall walkers go now? Is that still a thing? Or do you just go to
No, because there's
IKEA?
plenty of parks and they just walk around the neighborhood.
Okay. All right. Well, one last thing I wanted to touch on before I hand the show over to you. Friday, when the US and China deal talks, the framework in place for rare earth metals, almost all of the miners across the board declined, including Newmont Corporation, whose primary revenue driver is gold, and they do have some copper and silver and zinc and lead in there too. But as far as rare earth metals go that drive, technology like lithium and such, they don't even report those. So if those exist, they're small enough to where they're not even on the earnings report for them. And somehow the stock declined 5% on the news of the trade deal. So you might want to take advantage of that. I would say buy in on Newmont. I think it's still set up very well. Interest rates from the Federal Reserve level have nowhere to go but down. That's going to drive the price of gold higher. Government spending continuing to go up also drives the price of gold higher. Uh, I think it's in a good position, so I would buy it.
Gotcha. All right, Brandon Beaver making the call.
Yeah. I've held it for
Good
a
one.
while. I'm up quite a bit on it already, just so you know. But I
He
think it's
wants you to
still
buy one of the stocks he owns. Got it.
exact. Well, I mean, I own both of these stocks, so just footnote
I'm
that.
joking. I'm joking. All right, cool. Talking about a stock we own and wanting you to buy it as a listener. Let's move into GE Vernova,
Yeah.
right? Brandon and I both publicly own GE Vernova. There's some headlines on it, and it caused me to look into GE Vernova. So let me read the headline, and then when I looked into the latest news, because I haven't looked at it in a while, I own it, and I don't watch it every day because I believe in the company, and I don't feel like I need to. But let's get into this headline, shall we? GE Vernova explores sell Proficy software unit. I think I'm saying that wrong. Bloomberg News reports. U.S. power equipment GE maker GE Vernova is exploring the sale of its industrial software business, Proficy, in a deal that could fetch as much as $1 billion. This is what Bloomberg News reported. Demand is expected to GE for Vernova's is benefiting from surging domestic power demand. Demand is expecting to hit record highs in 2025, driven by AI, cryptocurrency, data centers. So some of these assets, such as the Proficy software unit, could be sold between 900 million and 1 billion. Companies working with advisors has reached out to industrial software firms and private equity investors looking to according to Bloomberg. GE Vernova has declined to comment on the story altogether. Right. So I was like, all right, well, I mean, what is this software unit? Let me look into GE Vernova, see what's kind of going on with the company lately. So the first few headlines, when I go into the news section, I use Fidelity when I want to begin a deep dive into a company, if you will. I use Fidelity, and I love Fidelity. I've always used Fidelity. I think it's a good company for it because there's a variety of things you view on it.
Yep.
The first few headlines. So you had the Explorer sale of Proficy software unit, first one. Then you have Siemens Energy targets U.S. transformer production in 2027 to expand their transformers and energy systems. Positive for GE Vernova. Then the next one's GE Vernova to support modernization of Rio Tinto's hydropower plants. Positive news for GE Vernova. Morgan Stanley maintains an overweight on GE Vernova and raises its price target. Positive news on GE Vernova. You get where I'm going with this.
Yeah, yeah.
It's all positive news. You had Morgan Stanley raising it. You had Japan's industry ministry making a deal for wind power. Wind power uh, on this. G Vernova has a third quarter dividend that is going to be paying out. Everything is positive. This stock has nowhere to go but up, Brandon, and I don't see an end to it continuing to rise. Given even though, and I'm a big person, a believer in looking at the PE ratio of a company and using it as part of the puzzle, just one piece of the pie, just to kind of get a better out overview. The PE ratio is at 73. I believe is actually going to grow at that rate.
Yeah, I agree too. I mean, I think that what people need to know is that they make the gas turbines that are being used to power most of the data centers utilized for artificial intelligence.
Right, exactly. Right, you said it all. I don't need to say anymore.
Yeah.
So even with so this new headline that they're selling a software unit, small potatoes compared to the main business here. I believe this is just for them to focus and use that cash on hand to grow the other business that actually is producing the income and the revenue for the company. So this all is a boon to GE Vernova, if you ask me. The stock was up 2.5% on Friday. A lot of stocks were up on Friday. It was a good news day for the market as a whole. I believe GE Vernova is, again, I'm just going to continue not to really watch it day over day. It's going to continue to grow. There's nothing but good news here for them. I don't see any downturn, especially as the AI environment continues to expand. Lots of news there on the AI. I mean, I found article after article or after article this whole weekend, Brandon. I think I read like probably 30 articles on different AI stories I could have mentioned today.
Yeah, you know what? One of them that came out last week was, and I saw this again as a clip on CNBC. A This is a Chinese startup called Zipu or Zipu or something like that.
Okay.
And it's again, it's another kind of artificial intelligence company that is making deals with the Chinese military and Southeast Asia and all kinds of stuff. And they're saying that this is a huge threat to American artificial intelligence. And they even listed NVIDIA like as a stock ticker when they were talking about AI and the threats and stuff like that. They showed NVIDIA as being threatened by GPU, I think is what it's called. Well, I looked into this company and guess whose GPUs they're using for their systems, and it's NVIDIA. They're an NVIDIA customer. By the way, so is DeepSeek, which is why, or DeepSeek or whatever you call it, which is why NVIDIA was like, oh, yeah, that's fine. We're cool with it. Because they're using NVIDIA's clocked down GPUs that are being shipped to China. So, again, not a threat, in my opinion. Maybe to Llama, maybe to
Right.
Meta's Llama or to OpenAI, but not to NVIDIA.
Not a threat, not a concern, not a worry.
Right. You have completely frozen, Dave. We may be having our first technical issue in our YouTube era.
Stuff in articles and on our social.
Hey, Dave, you completely froze. I didn't hear anything you said. Hey, are you there?
Can you hear me?
Yeah, I can hear you.
All right.
We're
I'm
back.
gonna continue talking.
Okay.
You might have to edit a little.
That's fine.
So
It's going to be on YouTube because I don't know how to edit video, but whatever.
nice. All right. So what we have is, insiders, so executives at the company sold $1 billion worth of Nvidia stock, and that they were saying that was a big deal, and look, they don't believe in the company or something like that. This is what I was seeing on social media when I was reading the article. That's a drop in the bucket, people, and they have to register this well ahead of time if they're considered a true insider in the company. They have to register with the SEC that they're going to sell, and it's done in advance. Everybody knows it's coming. The true big banks already knew that they were going to sell. It's $1 billion. So Nvidia's current value is $3.8 trillion.
Above Microsoft.
And so $1 billion worth of with their stock is not it's a drop in the bucket. And hey, good for them. They earned it. They were probably there at the beginning, and now they're gonna go fund whatever they want to fund with that money. That's their money.
Yeah.
So
I can see a path forward to probably being the world's most valuable company if they continue their dominance.
right, they might be worth more than all of BlackRock here soon.
Yep.
All right, so I want to go over some quick numbers. Gonna hit you with like a lightning round type thing. Brandon, are you ready?
Yep.
Here we go. Personal income was down 0.4% in May. That was below expectations. Sharp declines in proprietors' income, so business owners, transfer receipts, lower rental income. All this was offset by a 0.4% gain in wages and salaries. So business owners, rentals, they all took a hit on their income, but wages and salaries jumped up 0.4%. Personal consumption expenditures fell by 0.1% in May after a 0.2% in April. These are very minimal movements here. I don't know why this came out like we're like reported as big numbers here, but I'm going to report them anyways. Goods spending was down 0.8% and services spending was up 0.1%. It's really flat. So personal consumption on spending on goods and services flat is what I'm going to say. It's flat. It's such a small, minute movement one way or another. I'm not concerned about it. Core PCE prices, consumer price, rose by 0.2% in the month after a 0.1% gain. The year over year rate went up to 2.7% from 2.6%. Any concern there, Brandon?
No, no concern. I just think the Federal Reserve, we're getting we're getting to the point where they can lower interest rates. I
Yeah,
don't see why
right.
not.
As you hit 3%, I mean, that's definitely a signal to lower interest rates.
Yeah.
University of Michigan Consumer Sentiment Index. So, consumer sentiment, I've been complaining about on my soapbox on this show here for a while now. In June was actually revised slightly higher. So it's gone up now instead of down. It went up to 60.7. May's reading, it's well above May's reading at 52.2. What happened to the consumer sentiment, Brandon? Is consumers happy again?
I
Are
guess.
they happy now?
My favorite thing about the April Sentiment Report was that in the same report, in the same article that I read about it, and they said that people were rushing out to buy new cars before the price increases.
Right? All those people are hating it right now.
Yeah.
Here's some news I do want to talk about, and this is the Feds. So each Federal Reserve Bank has a regional bank, right? So I'm going to give you the Atlanta Fed and the St. Louis Fed for their Q2 GDP estimate, right? So the Q quarter two is getting ready to wrap up here in the next couple days. The Atlanta Fed current GDP Q2 estimate is 2.9% gain. It's revised down from a 3.4% gain. All
Okay.
right. The next and that's going to be redone again this week. It gets redone every week, but St. Louis Fed GDP estimate is for Q2 is a 1.02% gain, revised down from a 1.46% gain. My question is, two different regional banks have that's a big discrepancy between their Q2 GDP estimate. How can they be so far off?
Between the two banks or
Yes,
between
the
the
Atlanta Fed and the St. Louis Fed. Why are they so far off? One's almost at 3%, the other's at 1%.
because the experts know nothing. That's why they
I mean,
don't.
I agree. I agree. The experts know nothing. And we listen to these experts and we buy and sell stocks based off what they say, and they can't even get even close to agreement on an estimate.
I read estimates based on individual companies from a very select few experts that I trust, like CFRA, for example. Um, as far as buying those companies and things like that all comes from me. That's all my ideas that I generate on my own. I don't listen to hardly anybody. Um, Sometimes to my own peril, Dave, as you know, because you've recommended me stocks before that I don't touch because they're not in my knowledge base. But no, I just the experts. There's forecasts left and right. Most of them are never on. Most of the forecasts that they put out there are not gonna hit, including, by the way, Evercore's $90 price target on Nike. That just shows that they're bullish, but it's probably not going to hit Nike. It's gonna not $90. It's probably not going to do that. Maybe
Maybe
it
it
goes
goes to
above.
100, dude.
Maybe it
Yeah.
goes 100. Maybe, possibly, but $90 is probably not going to be where it lands. Exactly.
Right. And so yeah, this is why like when the Fed, I mean, they get together, they have their meeting. Atlanta and St. Louis got to come in between somewhere.
How
Yeah.
many of us thought there was going to be a recession by now, including me, by the way?
Yeah, that's a good question.
Yeah.
You,
Economists, everybody, like thought it was going to be a recession by now. It's not.
not me. I've
So,
been very
well,
vocal
I
about that
mean,
on the
yeah,
show. I
you,
said no,
you and
no
Tristan
recession.
Huff, you and
Yes.
Tristan Huff, which I promised I'd say I'm sorry. That's how far that's going to go.
There you go. See, so there's two of us that you knew that we said no, no recession.
Yeah.
I didn't see any evidence of it. All right. I want to leave here one last quick thing here, Brandon, and to talk about Rick Edelman. I know I got like 1 to 2 minutes here. That's all this is going to take up. I'm
Okay.
going to be very quick with this. Rick Edelman, he's a financial advisor. A lot of people listen to him. He has come on and he has said it's time for a rebalancing of portfolios, right? Typically, you have these 60-40 portfolio model, 60% stocks, 40% bonds. He said that's how it's been for majority of time in the United States as a financial advisor. And he says it's time to reevaluate and change that. He has now come out and said recently that financial advisors should be recommending anywhere from 10% to 40% allocations to cryptocurrencies, Brandon. Cryptocurrencies. He's saying that this is where the world is moving. These are now passing through legislatures. There's bills going through. These are now being part of the system. Governments are now holding cryptocurrency positions. Bitcoin is now going to be held by governments, by corporations, by all kinds of businesses and individuals. You need to own part of the pie. Life expectancy in the U.S. has risen from 47 in the 1900s to 85 today and is projected to potentially reach as high as 100 over the next 30 years if technological advances related to medicine proceed. So doing that, that's the main reason why he doesn't believe the 60-40 stocks bonds is going to last for your lifetime. So you need to have something else in there, and he believes crypto is the answer. He goes on to quote to say Bitcoin prices do not move in sync with stocks, bonds, or gold or
Right.
oil or commodities. And thus, because of that, there's something extra that you can add to your portfolio. Thoughts, Brandon?
It used to move in conjunction with the Nasdaq, but it's broken away from that recently. I do think that, like, if you could take time to educate yourself on the blockchain, I don't mind people owning cryptocurrencies, but I tell you, these financial advisors that hold strict to these certain percentage ratios, just there's a reason why they underperform.
That's true.
Dude,
Yeah.
if you find a stock that's undervalued, you buy it. And you don't
Right.
worry about the 60-40 crap. The funny thing is, as I was actually looking at my portfolio a couple of days ago, and I realized I'm at 60-40 right now. Um, if you include my bonds with my cash, so
Okay.
60% about stocks and then 40% cash and cash derivative investments and stuff like that. It's not on purpose. I didn't do it on purpose though. And if I break away from it, I don't care, and I probably will very soon.
We have a individual in our chat group that we have, our stock chat group. Um,
Yeah.
and he has so many different dividend paying stocks that he gets a dividend money coming into his investment account
That's awesome.
every week, and that's his way of growing his
Yeah.
account.
And there's good strategies. There's different ways to skin a cat, right? Like you
Yeah,
can do it multiple different ways, however you want to do it. If 60-40 helps you feel psychologically like safe with your investments, and that's fine. That's cool, right? But I don't care about it. I've never cared about that kind of diversification. I don't even really care that much about diversification, to be honest with you. I'm diversified right now on accident again. It's not on
the
purpose, but I am.
yeah. You really don't care. I will agree with Brandon on this. He just kind of he buys when he sees an opportunity, and then he sells when he feels it's reaches full
Yeah.
potential,
Yeah.
or there's something else better.
I do rebalance from time to time. Like after Nike's 18% 2 day gain, and I saw that it had more value in my portfolio than Google and GE Aerospace, I thought to myself, that's not right. And I sold a couple of shares to rebalance. But
There you go. All right, Brandon, it is that time of the show. Final thoughts.
Nike is a dip your toes in and wait and see kind of thing. It's going to require a lot of patience at this point. Newmont Metals is a buy. It's a good setup. The government spending is not slowing down, even with Trump in office. The government spending is not slowing down. Interest rates from the Federal Reserve have nowhere to go but down. They're not going to increase them. That wouldn't make any sense. Um, and Newmont still does very well above $2,000 an ounce. So, and we're like above $3,000 an ounce the last time I checked. I like Newmont Metals. I like Nike right now, but moderately be safe with it. And as always, buy Nvidia.
Right on. I like that too. I will say this. I mean, you know, I do like this Jim Cramer saying there's a bull market somewhere. Um,
Yeah, all the time. I mean, almost all the time, unless we're in like a Great Depression or something, or financial
right.
recession of 2007.
And so, just take your time, find your investments, find your right foot in. You don't always have to listen to the quote unquote smart people in the room there, the feds or the analysts on TV or Evercore or whoever else. Take your time, do your research. You'll find some good opportunities. We just tried to do this show to help people as much as possible. You would not believe how many people Brandon and I have helped get started in investing, and now so many of them have good amounts in their investment accounts. I work with people every single week, week in, week out, that are just now starting with their investment accounts. They get going, they build it up. The goal is not for them to be needing us to continue it. The goal is for them to get to a point where they can learn how to do these things on their own, and
Right,
that's our goal for everyone. So
right.
that's why we tell you how we come to these conclusions. Brandon goes in detail. I kind of do a quick overview of macroeconomic events. He does a more microeconomic fundamental events. Together, that's a yin and yang. You get a
Yeah.
full picture of how to view the markets and view things, and that's why we do the show the way we do it. But we hope you've learned. We hope you invest. I hope you buy Metsera because that pharmaceutical company I believe in and I believe in its future. That's my call. I'm going to continue making that call on Metsera. I think that's a good one to have. Um, but yeah, dividends, Ben, BEN, ARCC, ARC. Those are ones I own for
Yeah.
dividends. Since I mentioned some
Yep.
dividends today, Mo, I own Mo, but I don't buy anymore. It's high value. The dividend percentage, the percentage is the payout is dipped down because the stocks jumped up a lot. So I would hold off, but keep it on your watch list. So that's one I would add to your watch list if you're interested in dividend stocks.
From my end of the show today, my half of it, the most valuable thing that you could probably take away from it would be what my mindset is looking into the turnaround play of Nike. It's not even like if you were to buy Nike on Monday morning, that's not going to be the most valuable thing that you're going to take out of this. It would be what I was looking at, how I was evaluating the stock, and what my mindset is. I would much rather people learn from this and then buy stocks on their own than buy stocks that we recommend and then not know what to do with them after.
Right? Exactly. Exactly. All right. We're going to leave right there. All right. Thanks for listening. Please hit the subscribe button, hit that like button, share it as much as you possibly can. We hope that we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.